consumer confidence continues to fail, and it is going to be shattered as interest rates continue to go up. It is Sunday, March 27th, 2022. Let's get right into it. It's an absolutely stunning Sunday afternoon here in Palm Desert, California. It's going to be nearly 100 degrees today. And I want to recap on a few things, and please feel free to comment down below. Make sure you give this video a thumbs up, share these videos, and make sure that you subscribe. But let's talk again about gas prices. They continue to go up. $6.49 yesterday for super unleaded near my house. And there are more people out than ever. Many of you have commented and have seen the same things in your area where the traffic is just unbelievable. People are out. And you ask yourself, how are people doing this? I've really limited my driving, and I'm not doing a whole lot of driving. At these prices, it's absolutely insane. Diesel prices, insane. But again, the traffic, I haven't seen this much traffic in quite a while. And I ask myself, are people cutting something out? Are they cutting back on discretionary spending? And we were out at breakfast yesterday, and there was a family a couple tables over, and it was three people. I believe they were family members, looked like they were, and they were sharing one plate of hash browns. That's what they ate as for their entire meal, was all three of them sharing one plate of hash browns. And I said, you know, is this a symptom of what we're going to see, where people have to put gas in the car to go to work? They got to put gas in the car to get to the grocery store. And if they go out to eat now, they're going to share a plate of food. They're going to order less. They go to the store, they're going to buy less. They go to the grocery store, they're going to buy less. They're cutting things out. Is this a sign of things to come? Is this what we're seeing right now? And I was reading an article on the AP, and you know, we see all these cars out. It's a beautiful day. The wealthy are no doubt out spending money today. I've seen a lot of nice cars out. I see a lot of people at the nice restaurants out. But what about the average American? What about the middle class? What about the poor? Well, the AP reported that 687,000 households are unable to pay their rent in Los Angeles. That's 3.188 million households. That's 1 out of 5 people in Los Angeles unable to pay rent. And get this, half of Los Angeles tenants owe back rent. And how many other people owe back rent in the state that you live in the city that you live in? When you go to the mall, when you go to the shopping center, how many of those stores are unable to pay rent or owe back rent? But I guess that they have money to put gas in their tanks because maybe they're just not paying rent. So is this another example where people can drive around, but they're not paying rent? Or they're cutting something out in their life. They're not going out to eat as much. They're not buying as much on Amazon. They're not going to the mall. They're cutting something out. Maybe they've canceled their health insurance. Maybe they canceled their auto insurance. People are cutting something out. Let's talk about mortgage rates for a minute here. And how will mortgage rates affect the housing market, and what are mortgage rates going to do this year? Comment down below. Are they going to stay kind of where they're at right now at 4.95%? Will they come down? It's going to ease up, or are mortgage rates about to go up, continue this upward trend that we're seeing? I believe they're going up. And we have a housing market that has gone absolutely nuclear, basically. Just absolutely incredible what we're seeing in the housing market. Much of it from institutional money pushing this market up. A lot of it with speculation, this FOMO, this fear of missing out, all of these things on television with all the remodels and flipping and just, you know, getting people into a frenzy. And of course, many people in the business, real estate agents telling people if they don't buy now, they'll never have another chance to buy a house. Again, this fear of missing out, buy now or you're going to be priced out. There is no doubt in my mind that this market has just been artificially propped up inject it with lots of free money and low rates and institutional money coming in. It is not going up because of wage growth. Over past decades, we've seen the housing market go up. We've seen explosions in housing, but a lot of that was due to people's income, wage growth exploding, wage growth going up, and that typically pushes the price of a house up because people are making more money, they're willing to pay more. This is different, and this is why this housing market is a bubble, because it's fake. It's pure speculation, it's low rates, it's free money, it's institutional money coming into the market, and it has created a massive bubble. It is not because the average American is making more money, and this bubble is going to burst at some point. If you take a $1,200 and say, for instance, an example, a $1,245 mortgage payment last year at 2.87%, now with rates nearing 5%, that same payment will cost you $1,600. This is going to affect the average buyer. It's going to really affect the new first-time home buyer. And rates are going to affect everybody, even institutional money. Rates are going to affect these markets. And what's the magic number? Last time, it was 6% that blew the markets up. And right now, we're already seeing mortgage apps declining, sales declining of existing homes, new homes. It's all beginning to slow down. And we're not even at 5% yet. But these rates, as of right now, are pricing people out of the market because people don't buy the house on the price. They're buying it on the monthly payment, and they're beginning to get priced out as they're paying $6, $7 for a gallon of gas, as they pay more for a loaf of bread, a pound of hamburger, paying more for health insurance, as the credit card debt continues to stack up. And yet people believe they're wealthy because the price of their home has gone up, and they have this false sense of security, ladies and gentlemen, that they have money, that they're wealthy because, their $300,000 home now is worth $600,000 or $700,000. So they feel wealthy. But they're going to find out at some point that they're not wealthy because this wealth is going to be wiped right out. And as quick as it went up, it's going to be wiped out much, much faster. And remember, most of these houses are not paid for. And these people, that feel that they're wealthy because the price of the house went up, well, they don't have the money in their hands. And so what happens when the bottom falls out of this housing market? It's all artificial. You're going to watch wealth, this so-called wealth, disappear abruptly. So again, 6% blew it up last time. What's it going to be this time? Is it even going to take 6% to blow this housing market up? It may not. It's already seeing trouble under 5%. So we'll follow it, see what happens. But it's going to be very, very interesting to see what plays out this summer with record numbers of new housing coming onto the market. You look at the record number of building permits, homes under construction right now. I don't know what they're going to do with all these homes. And as people get into trouble financially, guess what they're going to do? They're going to sell their homes. They're going to sell their homes and hope to downsize or move in with their parents or move into an apartment. They're going to downsize. And we're going to see existing home sales go up, new home sale inventory go up. Watch out. We're going to see some really crazy things happening here. And I believe that it's happening right now, but it's going to be interesting to see where we're at in June. It's going to be very interesting. And of course, another hike coming in May, another hike coming in June. What does this all mean for housing? What does this mean for people that need to borrow money, the credit markets, your credit card payments, adjustable rate mortgages, borrowing money for a car, borrowing money to go to school, everything. If you need to borrow money, it is going up. You have to ask yourself, there was an article, are you better off financially today than you were a year ago? And this was an article a couple days ago on The Hedge, and just made a few notes off of it. A March TIPP poll found some concerning data. Get this. Fewer than 20% said they were better off than a year ago. 42% that they were worse off. 36% said that they were about the same. And 78% have seen no progress or impact in their financial lives. That's not a good sign, especially with the price of everything going up. 34% said they have no emergency fund. This is startling. This is extremely dangerous as we are heading into this collapse, this this collapse has been happening for a couple years, and these people out there that go, well, when's something going to happen? I don't know if you've been out lately to your local cities, your local shopping malls, your local retailers, local restaurants. I don't know if you've seen the debt and deficits lately. I don't know if you've seen the price of a gallon of gas lately, or the price of a gallon of diesel, or what's happening with this uncertainty in Eastern Europe and really around the world. You know, you've got to be living on Mars if you do not see the collapse happening right before your very eyes. But 34% of this country has no savings. That is a collapse right there in the financial lives of the American people. They have no safety net. This is extremely concerning. It's startling. 11% had 1 month of emergency funds. 11% had 2 months of emergency funds. This means that 56% of Americans have either no emergency savings or at best barely enough to last 2 months. Extremely dangerous. And I've said this before in the past that this is probably the most important time to own real assets, the most important time to have debts paid down, the most important time to be financially secure and independent, getting out of the system, having the minimal amount of debt as possible. The system is melting down. People's financial lives are melting down as they're not prepared to go into what we're going into. Ladies and gentlemen, this is going to be a marathon. This is not going to last a month or a year or 2 years. This thing is going to be going on for years. We've been watching this economy at least for the last 2 years really begin to fall apart. The wheels really come off this thing, the train coming off the tracks, as we say. This didn't just start yesterday or a year ago. This has been going on, and we could go back to the collapse of 2008, where it really began, and nothing got fixed, and we've created all this inflation now. We're going to pay major consequences for this. And the loss of a job, an injury, a car repair, people are going to suffer severe consequences here because so many have been living beyond their means. And I get it. Many people out there have fallen on hard times, not any doing of their own. And I feel sorry for those people. My heart goes out to them. Many of them had a savings, have already used it up. And it's going to be a disaster. But we've had a majority of people out there decide that they would, for the last year and a half, just party away, stimulus money, not pay rent, buy cars, buy electronics, take vacations. And now the realization that this economy is not going to get better as we were promised, that inflation's not transitory as we were promised, that the government would fix everything, that the Fed would never raise rates as we were promised. Well, it's all coming to fruition now, and it's about to get much worse. And I hope that all of you watching this continue to prepare. Do not get complacent. No matter what the market does tomorrow, this week, next month, it doesn't really matter at this point. The market is so detached from reality and what's happening to this economy. You now must detach from make-believe. You know, remember the Wizard of Oz, and you had the wizard behind the curtain, you know, pulling all the strings and pressing all the buttons. All they're doing now is creating an illusion that everything is okay. But read between the lines, read the data, you know it is not okay. A lot of people are suffering right now, and a lot more people are going to suffer. And if you're in trouble right now, now's the perfect time to go get an extra job. Do whatever you have to do to make extra money. Go get the extra side hustle, the extra job. If you have to downsize. If you're upside down in the car, maybe it's just time to sell it and get rid of it. This is the time to be dumping debt, not acquiring debt like so many people are doing. There's a lot of jobs out there, most of them service sector, most of them low wage. But hey, if you can work an extra 10 or 20 hours a week or more, imagine how that's going to help you. Maybe that will allow you to pay down the debt, buy a little bit of silver, buy a little bit of gold, just, you know, to put the odds somewhat more in your favor. Buy some emergency food, you know, buy the things that you're going to need. But there's a lot of jobs out there, and many of them, yeah, they're not going to be, you know, high-paying jobs. But hey, if you can pick up 2 side hustles right now, maybe that's what you need to do. Let's talk the bond market for a minute here. wolfstreet.com, the Treasury bond massacre and the spike to 5% mortgage rates. This is all going very fast. The massacre is playing out with Treasury securities and investment grade corporate bonds. Junk yields still in the twilight zone, but not for long. The bond market is flashing red. We'll see what it does tomorrow, but we've already been at about 2.5 or a little bit above. I think we're at about 2.48 right now, having a big effect on mortgage rates. Junk rated companies at some point are going to default, ladies and gentlemen, and this is going to pass on massive credit risk, creating a apocalypse in the credit market. So watch what's happening in the bond market. It is beginning to flash. We're going to see massive inversions. When investors demand higher yields on bonds, motivated sellers must lower the price of the bonds in order to sell them. And yields are now spiking, and prices of bonds with longer maturities are plunging. The train is moving faster while the Fed has raised interest rates a whopping 25 basis points. Just think about everything that is happening. The train is off the rails, no doubt about it. Yet we have a Fed that has moved 25 basis points with the Fed fund rate, doing absolutely nothing, still buying treasuries, still buying mortgage-backed securities. This is just an absolute recipe for disaster. Anybody telling you that things are going to be okay and that they're okay right now is absolutely eating fairy dust or lives on another planet. Absolutely untrue. The bond market is in very, very big trouble. And I don't think that there is a better time right now to pay off debt as much as you can. Pay it all of it off if you can. There's never been a better time to own gold, never a better time to own some silver, real assets. It's a great time to own some acreage. And, there's so many people out there that talk about, well, what are you going to do with this gold? Who's going to pay you dollars for gold? And, how this and that. And, I think at some point people are going to realize that we need to stop measuring gold as far as dollar value, but ounces. It's not going to be how many dollars do you have, but it's going to be how many ounces of gold do you have, how many ounces of silver do you have. With all these sanctions that we're seeing and what's happening over in Eastern Europe and now trying to freeze up the gold trade with Russia and saying that, well, you can't sell it. Well, they can't sell it, but what they'll try to do is freeze up the currency that they get paid in gold, right? So, what does that mean? Well, it just means that a country like Russia will just put the gold on an airplane and fly it to China and trade the gold for goods and services. Or China can put a load of gold on a plane and fly it to Russia and say, hey, this is what we're going to buy oil in. We'll give you this much gold. Sell us oil. So, this whole system is melting down, and people and countries are going to find a way around it. And if they can't use currencies, then they're going to use ounces, right? They're just going to physically deliver the gold in ounces, in bars, and they're going to trade it for another asset like goods, services, oil, etc. And so these people that go, well, who's going to give you X amount of cash for your gold? This and that. And it's amazing because we're so brainwashed to measure wealth in this fiat currency like the dollar. But at some point, and the world's beginning to realize it, it's not going to be about fiat currency and monopoly money. It's not going to be about dollars. It's not going to be about paper. It's going to be about how many ounces do you own? How many acres do you own? How much debt do you own? How many real things do you own? That's what, to me, wealth is going to be about. It's not going to be about dollars. It's going to be about what you own and how much debt you don't own and how many ounces you own in real money. Because the dollar isn't money, it's currency backed by nothing. Gold and silver, that's real money. It's backed by faith. It's backed by horsepower and manpower to pull it out of the ground. It's backed by 5,000 years of history of being money. It's backed by the world recognizing it as having value, as being real money. These people that say gold and silver are worthless, again, nobody has sent me an ounce of gold. I'll tell you that. I'm still waiting. If you think gold's worthless, send it to me. I'm still waiting. Nobody has sent it. But I'll tell you who understands that it's not worthless. Countries, governments, central banks. America obviously understands it because it won't send Germany its gold back. The Bank of England understands it. It won't send Venezuela its gold back. So again, you know, people getting this correlation of how many dollars for gold and this and that. I think we need to stop measuring wealth in dollars and start measuring it in ounces. I'm going to leave it there today. I could go on for another hour and just talk about everything that's been happening and things that I see that are going to be happening. And many of you have been spot on with your predictions and where this is all going and where it's all gone so far. Please keep the comments coming. Really appreciate it. You've really woken up so many people with your knowledge. Look, I don't pretend to be the smartest guy, the most knowledgeable guy. I don't have a crystal ball. I'm not a prophet. But I'll tell you, those comments down below, they'll tell you what's happening right now, and a lot of those comments are predicting about where this is all going. So you continue to read the comments, continue to put the comments down below. I really appreciate it, and so many people do. I know people that read every comment in the comment section, whether it's 600, 700 or 1,500 or 2,000. They read every one of them, and people are absorbing so much knowledge in those comments. So I appreciate all of you who have posted a comment down below. Whether we agree with it or not, makes us think. And sometimes these comments it could be a little controversial, maybe a little contradicting, but it makes you think. It makes you think outside of the box. So whether I agree with them or not, please continue the comments. God bless everyone. Have a fantastic weekend. We'll see what happens tomorrow. Talk with all of you very, very soon.